You know, markets rallied today after the Fed decision, after Jay Powell's press conference. Apparently, they liked the fact that he said at some point it'll be appropriate to pause. Mr. Powell said, watch the dot plot from June. What's the message here?
Well, the message is that there will be continuing rate increases, although I think starting at the September meeting, as he said, it will be meeting by meeting, which means I think the catch-up phase and the phase of getting to neutral is over and we're in a new phase. And he emphasized that at some point the committee will slow down. And that's a reasonable picture of how the next few meetings and the next few months will play out.
You know, Powell referred to the funds rate as neutral, but the PCE deflator inflation rate's at 6.3, CPI's at 9.1. That is so far above the funds rate. We still have a very negative funds rate. How could that possibly be neutral, Dennis?
Well, first of all, it's an estimate, and the estimates are not, you know, clearly have big ranges of potential variance around them. I don't think we should confuse what you would call restrictive territory or real positive real rates with the notion of neutral. Neutral really is where they think, you know, in normal circumstances, the growth of the economy and the downside risk are sort of in balance, and it's neither stimulative nor is it contractionary. That's what neutral is supposed to mean, and it's a notional number, 2 to 2.5%.
So I guess we should figure then that if we're at neutral now, what Jay Powell is telling us, look at the dots, which show rate hikes continuing into next year, that they're telling us we need to raise the funds rate well above neutral to get to the point where it's no longer stimulative and it can finally at least start to bring inflation down. Is that the conclusion?
Yes, I think that's exactly the conclusion. Neutral won't do it. They have to raise the funds rate a bit more. Close to 4% is the current projection, and that may or may not be adequate to achieve a decline in the inflation rate.
Dennis, when Chair Powell today said that he didn't think that we are in a recession here in the U.S., what was he thinking of as a definition and characteristic of a recession for him to think that we're just not there yet? And do you agree?
Well, first, he's thinking of it something that's very broad-based and of a fairly long duration, at least a couple of quarters. And he's also thinking of an employment market that gets hammered pretty badly by the performance of the economy. And I thought in his comments in the press conference, he really put a lot of emphasis on a positive employment market. And that's the principal reason I think he can deny that we're in a recession at the moment.
Dennis, how tricky is this effort, given that we have a lot of unusual elements creating that price pressure, be it what's going on geopolitically, be it when it comes to what we're seeing across commodities and supply chains post-pandemic, but also how much would he be concerned, would really the Fed be concerned about entrenching the inflation psychology at the moment? How deeply entrenched do you see that?
Well, he emphasized in the press conference that the committee does not believe that inflation expectations have become unanchored. That's the term that's often used. But they are very much focused on inflation expectations. They're going to watch all indicators very closely. He cited in the press conference the break-even rates that you get in the Treasury inflation-protected securities. So they're very much focused on that. going forward, I think depending on how stubborn this inflation is, they'll continue to monitor expectations, and I think it will be an important factor in their decision making.
What about the risk of recession? We're not in a recession now. Jay Powell in the past has acknowledged, yes, those risks are rising. Do you see the risks rising? And is the main risk here that the Fed has to keep hiking rates? That's the number one job until it sees economy coming down, and that's going to take a slowdown in the economy. They have to do it, recession or not.
The longer we get unacceptable inflation numbers, the greater the risk becomes, it seems to me, because they're going to have to continue to attack. And the risk of an overshoot, I think, increases. Remember, they're looking in the rearview mirror at numbers that are relevant to prices last month and the month before that. And it's not an exact science how they set the policy rate. So if inflation turns out to be very stubborn, which it could be, it seems to me that the risk of recession and the risk of a mistake rise.
Powell said they need to keep hiking rates until he's fully sure that inflation's heading back to 2%. Loretta Mester, president of the Cleveland Fed, speaking on this show, recently defined that as not peaking, but going down month after month, not just a core, the headline too. You were at the Fed, you sat there. What do you think that they need to see now?
Well, as Loretta Mester said, they need to see a series of positive numbers, and that means more than 1 month. Now, I think the next 2 or 3 cycles, and I say cycle because you have both the CPI and the PCE indexes, and you have the both the headline and the core. But the next 2 or 3 cycles will be very telling. And if you get, let's say, into the October meeting and it's been a series of good readings of inflation progress, then maybe a slowdown in the pace of rate increases will happen. But they need more than 1 month. 1 month is simply not enough to go on. If you remember in the press conference, he put particular emphasis on the word compelling evidence. And I thought that was a telling comment on his part.
Dennis, is this a death of forward guidance? Because we've also seen other major central banks, like here in Australia, the RBNZ, really come under a lot of criticism for the way that the guidance turned out to be wrong throughout the pandemic. So at this point, would central bankers be feeling that guidance, if they get it wrong, is actually more of a hindrance than a help?
Well, the guidance on the course of the economy, I thought Powell hedged that adequately, because he just said there's so much uncertainty. And at one point he said, nobody knows where the economy will be 6 or 9 months from now. The guidance on policy, again, I think he took a break with the last couple of meetings where they were fairly concrete about what to expect in the next meeting. Now we have 8 weeks until the September meeting, and he was not committal, and he, in so many words, said, it's likely to be 50 or 75, but we don't know. We'll have to see what the data tell us.